Have you finished your taxes yet? You know, April is rapidly approaching, but it's not too late to do some things to reduce your final tax bill and hopefully increase your tax refund. You know, basically we have two strategies. We can either do things that are going to lower our taxable income, or we can do things to get tax credits. So let's start off with how can we reduce our taxable income? The most powerful ways to do that is with an IRA or with a health savings account. An IRA is something that most of us know about, individual retirement account. And to the extent it's a regular IRA, what that does is it effectively lowers your taxable income. So it's going to lower how much tax you have to pay. If you do a Roth IRA, it's not going to do that, but a regular IRA still will. And you have until the final tax deadline to get those done. So that's one way. Another way you can lower your taxable income is with something called the health savings account. Now, I've done several videos on this. You can see some of them up here. I'm not going to go into details, but if you have a high deductible healthcare plan, if you have availability of an HSA, if you're using an HSA, you know, over 80% of Americans do not fully fund their HSA. So that's another way to lower your taxable income. And the nice thing about a health savings account is if a financial advisor could invent a tool, a retirement tool, it would be the health savings account, because you want to put money in on a before tax basis. You want a deduction for that, essentially, for that contribution. You want your money to grow tax-free, and then you also want to be able to take your money out tax-free. And if you do it right, watch that video again. If you do it right, you can get all of those things. So the two main tools that you have to lower your taxable income before your final tax deadline is an HSA and a IRA. Okay, now let's talk about some tax credits. First, what is a tax credit, right? There's tax deductions. Sometimes we get things that are tax deductions, and that essentially lowers our taxable income just like an IRA would. So there's many things that can be a tax deduction. For instance, your home mortgage up to $750,000. That is a deduction off of your taxes. Yeah, it'd be nice if we could subtract the full mortgage part of it, but we can only deduct that from our taxes. So let's say we have two examples. One is $1,000 that's a tax deduction, and the other is $1,000 that's a tax credit. Let's say you're in the 25% tax bracket. So if you have $1,000 deduction, that's worth $250 for you. But if you have a tax credit, that's actually worth the full $1,000. I like to think of it like a coupon that you take to the grocery store. And it says, you know, take $1 off this pint of Ben & Jerry's ice cream. Same thing, you're given this coupon. Tax credit is you're given this coupon, this hypothetical coupon to the government, and say, I'd like $1,000 off my taxes, please. So what are some tax credits? And really, these are things that you might have already done, but it's not on your radar screen, and maybe you're not looking into whether this is something that you deserve, that you should take off of your taxes. So let's look at this. The first one is the Earned Income Tax Credit, the EITC, and that's what's called the refundable tax credit. And what that means is even if it brings your taxes due down to zero, and let's say brings it even below that, let's say to negative 100, because it's refundable, what that means is you can actually get a check back. The government's going to refund you that money. So the Earned Income Tax Credit is for people that, for the most part, have kids. You get almost $4,000 a year for one kid. Now there are AGI limits, adjusted gross income limits on this, but $6,604 for two kids and $7,430. And while it's related to having kids, you do get $600 off if you have no dependent children. So if you have dependent children, definitely look into the Earned Income Tax Credit. Another one to look into are educational tax credits. Let's say you went back to school this year. you can get up to $2,000 a year. And essentially the government gives you a credit for up to 20%, for 20% off for up to $10,000 of educational expenses. And this is not just for a traditional college and undergraduate degree, the first 4 years. I'm going to talk about a credit like that, but this one is not. This one is not refundable. So if let's say you owe $1,500, you get a $2,000 tax credit. The government's going to let you bring it down to zero, but the government's not going to send you back a check for $500. Okay, now I mentioned the 4-year degree, the undergraduate degree. So that's called the American Opportunity Tax Credit, AOTC, and that's good for the first 4 years. And that's up to $2,500 per student that you can get back. And that is if your adjusted gross income is under $90,000 for a single and under $180,000 for a married filing jointly. So if you have a child that's gone to college or you've gone back to take some classes, look at this. The next one have to do with your children. It's the child tax credit. That's up to $2,000 a year. Now I should mention, I'm not an accountant. My goal in this video is to put some things on your radar screen that you can do some research with or hire a professional and say, hey, some guy on the internet told me I should look into the child tax credit. But that's $2,000 per child. There is an AGI limit, but it's pretty high, adjusted gross income. It's $400,000 for married filing jointly and $200,000 for singles, and up to $1,500 of that $2,000 is refundable, meaning you could get a check back from the government. Another one is the Child Independent Care Credit, CDCC. And this is to pay for things like babysitting, daycare, and after-school care. So if you have these expenses in 2023, you want to make sure you look at these and say, can I get a deduction on this? And it's for children under 13, if you have children under 13, or a spouse or any dependent who's not capable of self-care. And you can get $3,000 for one person and $6,000 for two people. And there are AGI limits on this as well. There's also an adoption credit. So if you adopted somebody in 2023, and it's pretty significant. This is to offset the expenses incurred when you adopt somebody, the legal expenses, whatever reports and whatever fees that there are. And you can get up to $15,950 in 2023, and this is if you adopt somebody under the age of 18. Okay, so those are the main ones. I also want to talk about I talked about getting the check back from the government. The average refund has been pretty consistent over the last 5 years, between $2,500 and $300. But you know what I call the refund check on your taxes? I call that an interest-free loan to the government. So you don't want to have a big tax bill surprise at the end of the year, but you also don't want the government sending you a check for $5,000, $7,000, $10,000. Because with banks paying 4 or 5%, it's better you get that interest than the government gets that interest. And on that topic, I want you to consider watching this video up here that talks about what is the average income for retirees in America. I think you'll find it interesting. Thanks for watching this one, and I'll see you in there. Bye-bye.